And good morning, everybody, and welcome to the TriggerCharts pre-market rundown for December 17th, 2020. I'm Andrew Horowitz. Hey, there I am. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts. Thanks so much for joining me today. We're going to spend some time discussing a variety of different things, talking about some names, some setups, some educational materials related to how to really properly understand setups. And then we're also going to be talking about your stocks, your names, your symbols. Maybe it's crypto, maybe it's futures, or maybe it's Forex, or maybe it's just stocks or ETFs. We cover that each and every Friday. With that in mind, a couple things to note. First of all, it is the Friday before Christmas. I'm sure there's a poem that goes after that, right? But it's the Friday before Christmas. We will not be having a session next Friday. And actually, I don't know, usually isn't it 7 days to New Year's Day? Let's take a look at this for a second. You know, the next 2 weeks, there's no sessions. This is the last one for the year. Big announcement. The last TriggerCharts pre-market rundown for 2020 is happening right now. I honestly didn't think about that before I started this morning, but that's what it is. You can always find all of these on the TriggerCharts.com website. We have those up and available for you, as well as our YouTube channel. So make sure to go over and subscribe on the YouTube channel on TriggerCharts to check out all of these and any other videos that we put up. Before we go any further, I want to mention that everything we talk about today is for educational purposes. It is not an offer to buy or a solicitation to sell any security of any kind. Is not to be considered a recommendation. Everything that we do is for educational purposes. So hopefully everybody understands that well. And in the chat, yes, you can put your symbols on there. We will take a look at that. Quick poll, just kind of get a pulse again on where we are in terms of who is listening. My question is right now, what time frames do you prefer? What is your preferred time frame? And take a look at this, because I really want to understand that poll that just came up. What bars do you utilize to view what you're going to trade off of? And I didn't put ticks on here, but I guess under 10-minute bars theoretically could be tick bars, possibly. But I think that when we look at this, I really want to get an understanding of where you're at. All right, let's talk about something right in the middle of your screen. Do you see that? Take a look at that right now. Right in the middle is a big, giant area right here. And what that is an offer that I want to bring you and tell you about right there. And what this offer is that you get 30 days free for masterclass. Now, I'm not going to go through all of this. I'm going to put this in the chat. There is your code. There is your link. Now, one thing I want to mention to you, it seems like there's something about when you do sign up, it says, hey, you're going to be charged $99 now, which is a reduction of the price of usually the price, and you're going to be charged $99 per month. I have been told that the $99 you're not charged. You get 30 days free. Anytime you cancel before the 30 days are up, you will not be charged that $99 if, in fact, you decide not to continue. I have a feeling that if, in fact, you work with the masterclass and you understand what's going on there, that may be something that you really are interested in. TradeStation puts this on. It really brings you to the next level of coding. Have you ever wanted to, you had this idea, I have a strategy. I think that if, I don't know, I'm just making this up. If the MACD crosses above this and the RSI is that, and we have a 50-day moving average and the volume is higher than this, that's a buy signal. I don't know, something. Well, have you ever wanted to code that? Well, the masterclass will kind of teach you some of that, as well as give you some assets that you can utilize and insights as well, but also gives you the access to a lot of people that could really help you on a lot of different things. So I think that's an important area that you want to take a look at. I was asked to do this, or I asked them to do this for me before the end of the year. So if nothing else, click on that and it will tell you all about what you get through the masterclass and the discount. You can see there's a discount code right there. So let's see what else we got here. Clear all drawings. All right. Some of the review that we do each and every Friday. First of all, it's options expirations like quad. I think it's quad witching today. It's kind of end of the year. Options are done. Last time for this year, the options will trade for this monthly, for the quarterlies. So it's always the third Friday of the month that you see a option expiration. It's not always a triple or a quad witching, but it is an option expiration the third Friday of the month. And that's where we are. And usually see some wonky action moving up into it, and kind of right about there where maybe there are some players that are looking to pin some positioning on a certain price. And what happens is that we see that, and when we look at that, we can say that there is a significant amount of interest at certain levels that maybe are option related. So that's what's going on right now. Not to mention that we have tape painting going into the end of the year. You've heard me talking about this idea of tape painting. What that is or painting the tape. What that does is it's really all about having the right positioning for institutions in their portfolio, that when they have to reveal and release their holdings material to the general public, to their shareholders, that they could show that they have, hey, I had Palantir or I had Shopify in the portfolio. Now, it doesn't tell you exactly when they've held it from, but they want to make sure they have that, and they want to get rid of the train wrecks in there so that it really doesn't show up and say, oh, hey, why did you have this really crappy investment in the portfolio? They have no splaining to do, if you know what I'm saying. So we got that tape painting that's beginning for the year end. You usually see this on the month and the quarter, more importantly, but year end is definitely for annual reports for anybody that is in fact reporting on an annual basis. Let's get to the poll. We have like about 80% of the people, no, 70% of the people actually voted. Let me tell you what the results are right now. So it's kind of mixed, which is interesting. Let's see. What time frame do you prefer? Let's start with the top number, which is as a tie. Actually, it's a tie. Under 10 minutes and daily bars are the most frequently responded to for the time frames that are used. 30 minutes are 17%. 60 minutes are 17%. Nobody's using 240s. Nobody's using 15-minute bars, which I would expect. This is kind of how would I expect. I expect most people using 5 and 10-minute bars if they're short-term trading. Now, you know, we talked about this, and if you're new here, I'll tell you again, I prefer to use at a minimum 30-minute bars. I think what you want to get is good information that is pushed into that bar. You want to get good price information. You want to get good volume information. And that's everything that we talk about when we talk about the trigger charts, the basic model of trigger charts. Not for everything, but for our core commander series, the altimeter and the autopilot, the radar. All of this is based on the combination of volume and price. And if you think about that for a second, here's why it's important. And here's why I think it's the best way to look at the markets. Because if you look at price only, it really doesn't tell you anything. It's very one-dimensional. If you look at volume only, it tells you stuff, but it doesn't tell you everything. When you put them together and when we calculate tick by tick, stock sales, stock buy volume, add in that volume, and then we put that all together, and then we start drawing our lines and giving you resistance and support points. And then looking where there's activity that's substantial, it gives you a good understanding of where institutions and where the masses are putting their money. So there's nothing wrong with riding the coattails of the masses. There's nothing wrong with going along with the crowd, but how do you do it if you really don't understand what is that price that they are most interested in? And the way you do that is by finding out where the biggest amount of volume resides within any time frame. So you'll see to the right here, we have this time frame, which is daily. This is the IWM. We saw the breakout above these levels because there really was no interest. Now, we knew that because it was all-time high levels, so there can't be any interest. But you saw once that break happened, it went vertical again. And honestly, it's been going vertical the whole month of since November. I mean, it's consolidation that went on. But if you did and you were able to pick up this great move on the upside, we had a couple here. I would have, frankly, 164 would have been the number I would have been satisfied with picking it up. In and out, then back in and out, back in. I mean, some nice profit margins on here. So something to consider. I don't like using, and I'll tell you why I don't like using shorter. I just don't think there's enough data. I think you get whipsawed around. And anybody that's using like 1-minute charts, you're not making, listen, is anybody using 1-minute charts making tons of money on a screaming move? You're in and out because it has such a tight range. And because that range is not significant, it's very difficult to really start seeing big profits. The ranges expand as you expand your time frame. And that's why a lot of people don't like to use it. A lot of people don't want to use a longer time frame because they're concerned over the possible risk factors. Let me tell you something. You can't make money unless you're willing to take risk. So Think about some of this and maybe think about it in your 2021 resolutions. Maybe just paper trade on a different and a longer time frame. I'm not saying you have to look at weeklies on a futures contract, which could really whipsaw you around and cause you a lot of agita, lack of sleep, heartburn, angina, all the things that go along with it. But extend it out to at least 30 minutes. Take a look at that and see what happens. I think that's something that you really should consider doing. And when you do that, I think that what happens is that you'll see that you'll get used to it. You'll get used to the overall ability to have the ranges kind of understand, okay, well, maybe I won't trade as much overall. This is something to consider for 2021. Quick update on where we are. We have pretty much all-time highs in the markets, and right now, really not much going on. The Dow Jones, once again, slightly down before the open. We've seen this many times recently. The S&P 500 of 5. NASDAQ, which just won't stop. No matter how many lawsuits are thrown at Google and Facebook and Apple, and how there is a continual level of understanding that there is some roadblocks ahead. It seems that the NASDAQ, the tech heavy and biotech heavy, is just attracting a ton of money, up significantly this year. So just keeps on going. One of the big things, I want to show you something. Let's see if I can do this. Let's see if I can do this. Let me bring something up. A lot of people are wondering, hey, what is it in particular that's driving markets? And I thought I'd bring you this chart, which is pretty astounding. That chart right there. Now, look at this area. I mean, unbelievable, right? When we're looking at a move of the M1, the money supply, and you can look up on your own what exactly M1 is, but take a look at this. When you see this M1 money supply going vertical, pretty much starting in, let's see, when was it? Back in February, which you would expect, but let's bring this all the way over here. And look, started really moving in March, but the secondary move that we saw here, this area to the right, I mean, right here is November. We went from a money supply, money pushed into the system, cash and CDs and money that's accessible by the public. Where'd the money come from? Came from stimulus. And that is a chart right there that explains, even though there was an expansive policy since 2008 that was pretty much in a straight line vertically from bottom left to top right, this move, I mean, look at that. You wonder why the stock market is going up? Look at all the excess money that's been pushed into the economy through various stimulus programs and Fed actions, monetary and fiscal policy. I mean, does anybody tell me anything other than like, oh, well, that makes sense? So what we're seeing is no change of policy by the Fed. We see a buyer's panic that's going on, a little bit of FOMO towards the end of the year, especially into what we see, that significant amount of money supply where there's money that's available in the system. And we saw the FOMC meeting today, no change in their rate policy until 2023. Everybody's like, okay, well, no change there. Increasing money supply, money all over the place. Money always finds its way into equities. And that's why we're seeing this big distortion right now in overall valuations. So bond buying to infinity, dovish hopes. That was kind of interesting. I don't know if you listened to the Powell speech, but he was kind of dovish, but yet he was talking about a big economic turnaround. So when you have a Fed that's dovish, but saying that, hey, while that's the case, we see that we're going to see a 4.5% GDP print next year. It's like, oh, wait, so you're still going to prime the system with a 4.5% GDP? How does that work? But that's what everybody's excited about. Crypto update, Bitcoin smashes. I mean, just rocket ship on the way up, 23,000 through records, as we're hearing a continuation of the institutional talk about many institutionals like a Paul Tudor Jones and several other major players getting involved in the crypto space. What that's doing is providing a significant amount of opportunity for people to say, there's only a finite number of Bitcoins out there, and maybe we better hop on this wagon, especially when we're starting to hear people talk about like, hey, 500,000 is the next stop for Bitcoin. Maybe it is, maybe it isn't. But you look at Bitcoin, and there are some ETFs that trade around that. Very significant differentials between NAV, the value of actually the holdings of Bitcoin inside their portfolio, and their actual value. I think one of them yesterday in particular is BITC. I think that's a symbol. Their NAV like expanded dramatically yesterday on that big move past all-time highs. And then what happened was that it dropped down like 40% from there yesterday with Bitcoin holding up. So you have to be very careful about these secondary types of positioning inside of there. All right, what else do we got? US dollar keeps on dropping, drooping. It looks like this is a continuation of what's going to happen as we see the continuation of the carrot that is put in front of us on the fact that we're going to have a $900-ish billion stimulus program and a very dovish Fed. Dollar just continues to go down. That is very positive for risk assets, particularly those outside of the US. So if you have a portfolio, you have to look at things like emerging market debt, foreign securities, etc. Stimulus update. They'll take this right to the 11th hour, 11.59 actually, if they can. Outside the US, I was mentioning Europe, eco data is a continuing concern, but these new lockdowns are going to seemingly go into place. I think there's a bit of a wait until after Christmas. Nobody wants to ruin Christmas. The hell with New Year, but nobody really wants to ruin Christmas. And I have this sneaking feeling that we're going to see some lockdowns in the US and the rest of the world. Japan hit a new record in terms of cases, et cetera. South Korea is exploding. And we're seeing Germany shut down, of course. I think there's going to be a lot more of that probably post-Christmas. Economics, retail sales, that should not say dissented, but should say disappointed this week, which was probably, on one hand, a disappointed what the analysts expected. I was not necessarily disappointed because that's what I expected, a disappointment. Because I thought that without the excess stimulus in the system right now, and the fact that people are pulling back a little bit ahead of no stimulus, and the fact that everybody's pretty much got what they need at this point, and kind of got a little bit more aligned with the new normal, that they were going to think that I don't need to be buying as much right now. I've gorged myself enough on Amazon. I don't know about you. It's Christmas here every day of the year. I don't wait till Christmas to start buying. I have boxes that show up every day at my doorstep, at the office and at the house. And it used to be kind of what I get. Still to this day, I'm like, open a box, go, hey, what'd I buy? I don't remember. So, you have right now this situation where there is a significant amount of buying that has been done throughout the year, and you have to question how much more is going to really happen into Christmas. Yes, there'll be a lot of opportunity there, but you just, we know that already. It hasn't been talked about a lot. You heard how quiet the National Retail Federation has been, and we're seeing no real numbers come out about what a great Christmas it is, what a great New Year's or end of year holiday season is going to be, because there's a lot of concern that the malls are pretty much down, 55% on foot traffic, 60% on sales, and just, nothing's picking up there. And especially as we have the continuation of further outbreaks, concerns, et cetera. Initial claims moved over 800,000 for the week. That was something big. Nobody cares. It's just all about moving the markets up. It has nothing to do with anything else. It's like, where do I put my money? Oh my God, I got to get my money in. Markets are moving up, so I need to follow along, which is fine. Let's play. I have no problem with that, but just realize there is a secondary side to this, that there is a little bit of problem with the collar matching the cuffs right now, from the aspect of where we are in economics fundamentally and where prices are. Something just to consider putting in the back of your mind, not to do anything with until pull it out to when you need to say, okay, this is the plan now. Right now, this is not the plan. The plan is, hey, there's free money. Hey, the Fed's being cooperative. Oh my gosh, we got more money coming in and everybody's buying stocks. So you know what? Let's get on that train. That's the playbook right now. That will change. I don't know what it's going to be that's going to break that. It could be the news about the stimulus being very disappointing. It could be the Georgia elections that are coming up. And if in fact there is 2 Democrats that come into Senate, which would mean a tied Senate, which Vice President-elect Harris will have the tiebreaker, meaning that is a proxy for a blue wave, which then means that taxes go up and all that. So keep paying attention to that one particular market event that's going to become very important into the new year. Economics next week. I mentioned there's no webinar next Friday. I mentioned there's no webinar on the 1st. I mentioned this is the last of 2020. And by the way, thank you so much for making us the #1 overall in the trading app store for TradeStation, as well as the #1 highest rated overall as well. So thank you. Very much appreciated. Next week, also, we have GDP, third quarter, short week for markets. Probably be light volume towards the end of the week. PCE prices, the Fed's preferred measure of inflation. New home sales, which have been a bright spot in the overall economy. And we have durable goods as well coming out. I'll mention again, if you haven't and you're on a trial of the TriggerCharts Commander Series, if you subscribe, and when you subscribe, just write us at support@triggercharts.com, and we will send you for free a 4-hour coaching session online, 3-part learning and educational program that you could do at your leisure, usually valued at $199. People pay $199 for it all the time. If you want that, it's only $149 to subscribe. So you get a full subscription for the Commander Series for a month, and you get this free 4-hour course. Why not do it? It makes all the sense in the world. All right, let's take a look at some of the IPOs. Let's take a look at, I think I mentioned this before, and I'll tell you again. All day, you can put these up on your one of your workspaces. These are kind of the stocks that are moving the most throughout the day, so we can see quickly what's going on, take a look at what is going to possibly be the things that we should be watching on a regular basis throughout the day. You kind of go up and down. This will rotate. You could do things like, say, not only do I want the number one gainers percent for the day and put that up here and the loser on the bottom, but you can say, hey, what's moving up on a gap or down on a gap? Or you could look at, for example, the biggest gainers on a 2-minute basis. So you have, where is that one? Rapidly rising, rapidly falling on the bottom here. You have gap up runners. There's a bunch of stuff that comes in here. That's where you get your idea, somewhere you get your idea generation on a daily basis. So KRI, people ask me about that on a regular basis. Right now, going nowhere, probably continuing the trend as we talked about recently. All right, let's take a look at some stocks in no particular order. Actually, let's get to a couple of stocks. If you have stocks, please put them in the chat, and I'll put that right here. I'm going to say here. I'm going to put that in the chat right below where I put the link to the freebie that I mentioned for the masterclass through TradeStation earlier. So I talked about CRISPR, and I think we drew these lines in a couple of these boxes last week. And I said, CRISPR had this great breakout, and its cohort Edit, for that matter, a competitor in the same space of CRISPR technologies for biotechnology, moved up dramatically, and now it's consolidating. We can see the consolidation down about 141 and change, currently trading at about 150 today. Pretty volatile stock on a daily basis. I mean, we see ranges from 160 down to about 145 on a daily basis, and this is 162 down to 142. So that's a pretty, it's 8-9% range. Decent trading stock, long-term hold right now in a consolidation pattern. Really need to see a break convincingly above 155 to get the next legs. Now, they just had a $5 billion offering. I think it was $5 billion offering, and that kind of put a little bit of crimp in the stock. But at the same time, people realize that these companies need this money to continue on with the research and development. And once they have a breakthrough, it could be a multi-billion-dollar breakthrough. And that's why people are really attracted to this. FedEx came out with earnings tonight. I put a line in here, 285.35. Currently trading, actually, it's trading at 280.370. So that's where it's trading right now, down to a couple of levels of interest. I would think that we may see it kind of right about the 282 level or so. There's a recent bottom there. Right now, this is kind of an island on the top, not a convincing level of support right there. And frankly, I'd like to turn on my radar so I can see what's going on. Yeah, just what I thought. I mean, really, 275 is probably the range that I would look at to start thinking about maybe getting involved in this again if it doesn't hold today due to the fact of when earnings came out. And what I'm looking at here is a combination of things. I'm looking at, okay, where are those major levels of interest in terms of that fat part, the fattest part of a particular radar? And obviously you could say that, if you really want to play it out, down there is the number. You got a lot of lines that you can draw and connect across from the radar, the altimeter, tops of another radar. I mean, that's down at 257. Not something that necessarily is that absurd to consider on FedEx right now. But, with all the optimism over holiday, they had a really good optimism on increased sales. The concern was their earnings came out. There's an expense line that they were concerned about, or the investors are concerned about, that they are now in a situation that it's costing them a lot more to start sending things or to send things, or their internal costs are costing them more. Now, they're also shipping the vaccines. There's going to be an uptick in income for UPS, for FedEx. In that, let's shift over to UPS. There we go. UPS down a little bit today, trying to break out, looking a little bit better right now. UPS overall, nice green. You can see a lot of green going on there. And let's put on our aileron also. There's our aileron. There we go. And let's go back to FedEx for a second and see the difference. We have a green on the aileron on the up. Yeah, we still have a trend, a little bit of a divergence on the downside that we're seeing there. Let's take a look at Asana. Asana is a recent IPO. This is a really cool, actually, I use this system. It's a great productivity system for project management and task management. It's free, frankly, for some people over, I think, 3 users or 5 users. You get a $50 a month. This is, in my opinion, a prime candidate for a buyout. This seems like a Salesforce or Microsoft or several other companies that could look to buy this. It is a really good complete package. When you combine this with other things like Microsoft Teams or Salesforce CRM, or even Slack, which has now been bought by Salesforce, of course, you really get an unbelievable communication and task management, prioritization, and reporting system. Very simple to use. Again, you just use it for tasks. You assign it, say when it's due, and then you have a constant discussion of where it is. There's calendaring, there's project management, there's the whole playbook here. Anyway, came out, thought it was interesting. What I like to do is I like to find where these IPOs either do one of a few things, come down and then start breaking above a prior level of that IPO. So you just flush everybody out and then you start getting back above. And that's what happened recently. And we got that big move to the upside, came back down again, came right on that support line. Again, too young of a stock on a daily basis to show us the altimeter, the aileron, et cetera. But you could have traded that on a 30-minute basis plenty of times. Right here, you would have been in at 22 and change, out because on a stop, then in again, out at about 29, bam, in at about 29.37-ish, and still holding long, got out yesterday actually at 39 change. But notice the differential in range. We're talking about a dollar range here, okay, on the 30-minute. We're talking about, if you got in, again, this is not necessarily the TriggerCharts Commander series on here, but you're talking about a 27 up to about 32, 33 on a daily. Edit, that's the one we talked about before. Island sitting on the top here, holding support very nicely. Look how it ticked down beautifully right into our high volume node, the point of control right there, if you want to call it, the cruise, as we use those airlines terminology for our altimeter. And you got really good support right now. Right now, trading at 62.99, 67. I would call 68 really an area needs to see a breakout. This is a bit of a flag pattern. You could draw this on your own. You could take a look at this and kind of really suggest to yourself that you have this kind of, flag that is happening right here, give or take, something like that. And usually what you see is, a continuation to the upside on that flag. So something to look at on edit. Even though it's, you say, well, I don't want to buy a stock that's moved up so much. It doesn't matter what you think about the stock or not. Where it moves is going to move. So you want to capitalize on that, profit on that, and utilize that for your own benefit. Now, Fastly is something that we looked at. We have one more minute here, and I'm going to look at somebody else's stock here, Laser. Fastly did break out. I told you about this range on the top last week. Probably have upwards of up to about 112 on this. I'm going to look for a short on this. I know I'm going against the grain here, but you can play this on the upside right now. We saw this big reversal. The idea is, hey, well, they'll do a lot better since they crapped out once again, as they have done before, right here, right? 119 down to 75, 133 down to 66. Now they're going to try to move it back up, and I would say somewhere around the 116, 118 level is something you want to look at. Somebody asked me about LAZR. Let's bring that up. This is a SPAC, Luminar Technologies. Recently got an upside move. Very aggressive, very volatile move, 10, 12% in a day. Right now, called a short at about 30, where is that? 30 and a half, currently trading at 26. I would expect that there's a bit of a range here. Let's see if I can pull this up. Yeah, below these levels here, about 25, you're going to be seeing back down to 13. Do I think that is possible? I don't know. Anything is possible. I think you'll see a lot of resistance above 30, but you may see that opportunity come up and work well for you above that level. So let's see what else we got here. DraftKings, interesting play here. Above finally, there's some possibility of New York and others looking for tax revenue, going to push that up and allow for that to happen. Bitcoin at 22 and change, drooping down over the last couple of hours here, but obviously that move was ridiculous. But on the top here, you'll notice that we have a significant amount of long bias, 11 bars, 9 bars on the Bitcoin, 3 bars on the daily, so weekly 9 bars. This is really the play. So thank you for joining me. Make sure to get your free 10-day trial of any of the indicators on the trading app store. Please leave a review, and we have a special surprise for you when you leave a review for the first time. Just if you do, send us an email, support@triggercharts.com. I want to wish you a Merry Christmas, a Happy Holidays, a Happy Hanukkah, Happy Kwanzaa, and a great New Year. We're going to be back again next year, 2021, and you need to be here. You need to be ready. We're going to make some money together utilizing the Trigger Charts Commander Series. So thanks so much for being here throughout the entire year. Thank you for making this such a success. I mean, I seriously, I'm really grateful to that and appreciate you. And hopefully you've made a lot of money with it. I know you have, because a lot of people have written me. And we're going to be back next year. Take a little break, take a little vacation, rest up, get refreshed, and let's get on with next year making some big money with Trigger Charts. Thanks so much for joining me, and I will see you again next week. Well, next year. Next year. I said next year.